Interest rates are on the rise, prices are soaring, supplies are limited, and what does that mean for the small business community? In this video, I will go over where we are with rates, where they're heading, how higher prices are affecting everyday businesses, and what the bottleneck in the supply chains are doing to the bottom line of those businesses. Welcome back to Mystery Money. My name's Nick, and if you're new here and you're looking for money tips and tricks, ways to make your business run more efficiently, or you're just looking for more information on starting or growing a business, start now by hitting the subscribe button and turning on notifications so you don't miss anything. The Federal Reserve raised the target for the Fed funds rate by a quarter point during its March meeting. This is the first time in 3 years, and it signaled ongoing rate hikes ahead. The Federal Reserve now sees the rate hikes at each of its 6 remaining meetings this year, with a Fed funds rate target of 1.9% by the end of the year. So what exactly does that mean? Well, the federal funds rate increases, it makes borrowing costs for banks more expensive. The days of the savings and loans where a bank could take in deposits and then they lended that money to your neighbors for a fee really no longer exists. The banks find it much more profitable to borrow from the reserve for little or no fees and then make even higher profits. With the Federal Reserve hiking these rates, it will make banks eventually have to pay more in their savings accounts for your money that you have on deposit. Even though these rates are going to increase, the chances that you see any real effects on your savings are slim to none. There's probably a higher percentage chance that we either enter another recession and the rates go back down before you get an extra 0.05% in your accounts. With the prices of everything increasing, more and more families are finding themselves short on money for everyday necessities like food, medicine, gas. Where this affects them directly is when they cannot pay for things with savings or their current paychecks due to the price inflations. They put it on a high interest credit card, and that rate just increased. Some of these price hikes are due to the supply and demand and the supply chains kind of being slowed down due to the but it's also a little bit of gouging in the market. This is especially problematic for small businesses because it's not that easy to simply raise prices to offset the cost of materials. Think of the lumber store that purchased 2x4s at $8 a piece, and now the going rate is $6 a piece. If they were only to make a small margin to begin with, they can't charge more than someone else because then their inventory is just going to sit. If they charge less than what they paid, then they lose money. We are experiencing this in our own business more than ever. Prices for fuel were at record highs and they've only come down a little bit. Parts, if you can find them, are astronomically high, and everyday maintenance items such as oil are limited. This is also leading to shipping costs going through the roof, and when that happens, the prices for goods and services also increase. If we go back to the interest rate increases, borrowing costs for businesses are also increasing and largely higher than consumer credit. Most business loans are variable, meaning that they adjust with an index. All an index does is it tracks prices based on inputs. Most famous is the prime interest rate, or the best rate that any bank will give to their best customer during that period of time. Thousands of banks throughout the country are asked what their rates are, and it works out currently to be 3.5%. Not that your best credit is going to get 3.5%, that's just a benchmark for the banks to use. The prime interest rate had been at 3.25% for the past 2 years since all of the pandemic happened, but before that it had reached 4.75% in October of 2019 and 5.5% in December of 2018. The highest prime interest rate was 21.5% in 1980. All revolving credit such as credit cards, lines of credit are tied to this rate. If you look at your statement or you look at your loan documents, you will see it expressed as P or prime plus a percentage. And then there's going to be verbiage like as published in the Wall Street Journal. There are some other additional indexes such as LIBOR, but those are really only used for higher dollar amounts and types of facilities for lending. And even that is going away, and they're going to a different rate index of SOFR. To sum up the rate environment, it's not looking good for the near future. There are economists that believe that this is only temporary and that rates will decrease in 2023, but who knows? So what can you do? If you have variable rate debt, get it into a fixed rate vehicle as soon as possible. This would be a fixed in line of credit or a term loan, terming out your line of credit. If it's a home equity line of credit, maybe you can term out a portion, call your lender, see what options you have to get away from that variable rate. The thing that's attractive to lines of credit is that you don't have to pay the principal, only interest, which makes your payment a lot lower. The problem is that in a rising rate environment, you can find yourself underwater pretty quickly. If you have a line of credit as a business, call your lender and see if they can term it out, or at least if they can fix the rate over a period of time. This way, you at least know what your payment is going to be and you can plan for it. If you have that home equity line of credit, See if your lender or bank has a similar option. At the end of the day, the near future looks expensive for both businesses and consumers. Do your best to limit spending on non-essentials and lower your overall debt. Thank you very much for taking the time to watch this video. I hope it gives you a better understanding of where rates are going and how to better prepare in the future. If you have any questions about anything I went over in this video or business in general, make sure that you post them in the comments below, and until next time, have a great day.